All right, Jared, we are back, and this is going to be the last one of the whole series. We knocked out so many things talking about co-living and how to better vet through some of our errors, some of the things we've learned through networking. I really want to touch on this one, and a lot of people miss this. What type of insurance do we need on our properties when doing co-living?
Yeah, so I just recently found, and I'll announce here, a co-living insurance company. Not strictly, and it's called Steadily. Don't know if
Yep,
you heard of
that's
them.
who I use. Yep.
Oh, okay. So that's who I recently contacted, and I'm switching over to right now. Not only do they offer, rental, but co-living insurance, but they're cheaper. They're cheaper than just about anybody else I found. And I was like, wow. And now they don't do primary residence because I did have
Yep.
them give me a quote for that, and they're not cheaper in that space, but they are cheaper with the rental properties. And I wanted something specifically for co-living, and I think they're one of the few that are doing co-living
Yeah.
rentals, if I'm not mistaken. I mean, it's the only one I've found so far, and I've been looking.
Yes. So I mean, I think our last video when we just talked about this on my channel months back, I was talking about insurance maybe offline a little bit because I had my property insurance give me a notice they were not renewing.
That's right. Yeah.
So, and that's when I found out and I'm looking into it. I didn't even tell them I was doing co-living before when it was a long-term rental rent by the room. They were okay with it. I didn't think to reevaluate that when I went to padsplit. They didn't like the weekly rental no leases, even though there's a membership agreement with padsplit. Insurance companies don't look at that as a lease because it's not. It's just
Hmm.
an agreement. There's no
Right.
long-term stay. So they would no longer insure me. Now, it steadily was more expensive, but it wasn't so much more expensive that what people don't think about when you're running this model is, yeah, maybe you can get away with having long-term rental insurance coverage, just like rental insurance coverage on your property, just as an investment property. But what happens if you actually do have a claim you have to file and you need to use that insurance? Is
Yeah.
that insurance company going to pay out?
Yeah.
I
I
don't
don't know
want to
how.
test that.
Yeah, I don't want to test that either, but I am learning as I go. I used to have low deductibles on
Yeah.
all my properties, but through listening to content from Lumberjack Landlord and talking to different insurance brokers and whatnot, I've since learned that I'm not going to have a claim for 5,000 or
Mhm.
$10,000 because then all my properties will go up, right? The
Yep.
the premium. So what I did was I raised all my on the previous insurance company and steadily I put my deductible at 10 grand because I have reserves for things. And if something happens, I'm going to pay for it out of pocket. Pretty much the only reason I would make a claim is if the house burnt down or something major, right? Like that's the only way I would make a claim. So for me, I just raised that deductible to 10 grand. So on average, I can say my annual premium for the co-living rental insurance per property. Now I might do the umbrella policy too, which is more on top, but not much. So I'll probably do it, but is about $1,000 a year. And I'm in the Arizona market. So, and I know some
Okay.
people have seen that, and these are $500,000 homes. So people are like, holy crap, that's really cheap. So I'm not really sure how they're doing it, but I have reached out to people that have had them for a while and they're happy with them. I don't know if anybody's made a claim with them yet though. So, but I've already told them, let's do it. So I've submitted the paperwork and I was going to wait till January 1 to switch over, but I thought let's just do it. Yeah,
Yeah.
let's go for it.
So I will say, that's another thing we talked about where your location is and what your insurance is.
Yeah.
Now, my property is a little bit bigger than yours, but I'm in Charlotte. My insurance is $2,400 a year.
Yeah. Well, you have
So
natural disaster
natural
threat.
disasters, yeah, like the hurricanes just went through and wiped out almost all Asheville. That's an hour and a half away. And Charlotte, because they're in with all that coastal area, even though they're not on the coast, we still get hit. That the same insurance companies are writing their policies. So
In another video, we had talked about how you choose your market, and that was one of the key factors of
yep,
why I chose Arizona because I'm not coastal. I don't have hurricane threats, and like Oklahoma will have tornado threats. I mean, the worst you're going to have in Arizona is potentially a fire.
yeah,
I don't think we have any major earthquake issues or anything like that. So for me, it checked all the boxes. So
yeah, and
that's why
like
my
with
insurance is so cheap. Sorry.
no, you're good, you're good.
Uh,
No, and that makes a lot of sense. And I seriously called over 20 insurance companies. I found three that were willing to do co-living, well, specifically pad split, because some will do if you have a long-term lease, if you have leases. But a
mm,
lot of them got shut off once you said it was a week by week rental.
yeah.
Um, and I don't know how or what my insurance company is doing, but I guess some of these insurance companies do their audits and they see something that pops up. I never had a claim or anything on this property, but that's what really dinged me. I'm like, crap, I have a regular long-term rental insurance policy. Like, it's probably not going to pay out if something does happen. And I did the same thing for this policy. And even what you said with this, my deductible is 10 grand and it's still $2,400 a year.
Yeah. Well, it's higher risk,
It's
especially
high
now.
risk.
You're getting dinged for stuff that's not even
Yep.
tied to your property. You're
Yep.
getting dinged with
The
other
coast.
costs that are
Yeah.
happening. Yeah.
And yeah, some of these insurance companies are, they do Florida and all the other problem states that have been a big problem recently.
Yeah.
Um, and just this is not pad split or co-living specific, but like I looked at that in my market as far as my single family rentals, and it wasn't worth jumping up to 10 grand for the amount of money and risk I was taking on. Like I could have saved over all my properties like a couple $100 a year. So 2,500 deductible to a 10 grand deductible wasn't a big enough difference to me to even make the change. So,
Yeah. Yeah, for
but
me, it was a big enough difference, not only for, I'm going to touch on another topic, but for the loan,
okay,
right? Because I switched from a $2,000 deductible to a $10,000 deductible. And on the two DSCR properties, I needed to qualify it as a long-term rental. I didn't have to, but I wanted to. One of the houses, they could have used Air DNA and made it work, even though, by the way, I've heard it. I'm sidetracking myself here, but that was part of the deal. I changed it from 2 grand to 10 grand, which brought me into the long-term rental. Therefore, the loan would work. So that was
okay,
enough difference. It was like 107, whatever. It was enough difference to make the loan work.
hmm,
But another side note, I've heard that how there's Air DNA,
yeah, for
there's
Airbnbs and Burbos, yeah,
yeah, there's talks of co-DNA, co-living
huh.
DNA. So the lenders out there, potentially have another source of data to where they can base the lending world can start looking at this like they do for Air DNA.
Yeah, because lending is another problem that we didn't even talk about in any of these is yeah, you're if you come at them with a pad split and that's your idea of what you want to do, it is harder to get lending.
Yeah.
So,
I only know of three lenders, and even those two will tell you by the time you start to the time you finish and say a 30-day close, it may change.
and they also usually still want to go off of long-term rental rates. They'll still rent out the property, but or they'll write the policy, write the loan, but they're gonna go off of long-term rates, usually long-term rental rates. So, yeah, I mean, overall, like that's another topic, and we don't even have to hit on that today. But I feel like we touched on so many things throughout the series that some are obvious, and some are not obvious, and those are the things that are going to get people in a hole and possibly turn what they think is a good cash flowing property into a negative cash flowing property or a break even. And I fell into a lot of these, and I'm not cash flowing great on my property, and I'm just now seeing after so many errors that I've done throughout the first 5 6 months of the setup that now I'm finally getting that cash flow moving like I want to. But the first, yeah, I'd say about 6 to 7 months of this was rough and
Yeah.
put a lot more into it than I expected to.
See that, right? So what we're doing right now for the people that are interested in this will help them immensely. I think it'll shave those growing pains off,
Yeah,
assuming they listen. And because like me, I didn't listen to a few things and now I do. Um, but I think this is crucial for helping others. We're
yeah,
not charging anything or doing anything. We're just trying to get the information out there for people that want to pursue this. So hopefully there's a few tidbits in here that will, save them some time and money.
yeah, definitely.
Speaking of that, we should have next time we meet, we should do a tips and tricks video.
Yeah, I'm
You
on
know,
board.
throw a little
Awesome.
teaser out there for the next one, like putting mirrors in the bedroom so people don't occupy the bathrooms as much. Um,
Huh.
those are key things, because if you have someone in the bathroom, they use it just for combing their hair, they're occupying the bathroom if you're in a shared environment. So the mirrors is a big one.
I
There's a
will
few others.
say, yeah, I will say I one of the biggest things that drew from my property, and most people aren't going to find this. I mean, I have 5 full bathrooms.
Nice,
So 3 of my rooms are private bath. Only, and the
nice.
other ones only 2 people have to share each bathroom.
Hmm.
So that makes a huge difference
Yeah.
is the bathrooms, which we really didn't talk about on any of these videos, is the bathrooms.
Yeah,
But
it's key. I think parking and bathrooms are
yeah.
two of the key considerations. So, yeah.
But yeah, tips and tricks. We'll definitely jump into that next. Jarrod, thanks for jumping on today and making just this whole like kind of masterclass for co-living.
Yeah, man, it's fun. I love this stuff. So, I encourage people to hit me up. I mean, I've sat down with people for coffee for 6 hours before just talking real estate and
Yeah.
life and investing. And then Zoom videos like this. I've been on for 3 hours, and then actually in about half hour, I got to jump on to Zuber's Sunday Sync at 12:30, so we can have that
Yep.
discussion again.
Well, I mean, all these videos will have your information, your calculator in them, and so if anybody wants to reach out to you, and of course, my stuff's going to be down there too. So,
Awesome, man. Well, thanks for having me, Paul.
yep.